We're going to go straight out to San Francisco where Dan Gallagher is standing by. This stock soaring on the news. I guess not very unexpected considering some of the other IPOs we've seen this year. But Dan, what do you make of this first day of trading?
Well, it's certainly a strong debut for them, especially considering that we had some signs earlier in the week that there was some concern both in the broader IPO market as a couple of deals got pulled, as well as some concern about Yelp specifically about how well they can monetize their level of marketing. Those don't seem to be playing out this morning. As you notice, the shares are up more than 60% from the IPO price, even up from the opening price. So it seems, at least for now, investors are liking what they see.
And the volume on this is crazy. It's twice the float that they sold, which means that people are getting in and out of this stock. They're not necessarily buying it to keep because they think it's a good long-term investment. Right. They're getting out of it as the price goes up. Does that suggest that we should see more volatility in this stock going forward, especially in comparison to how other IPO stocks have done?
Well, I think a lot of these stocks do remain volatile for weeks and months following, George, partially because of the the lockups on insiders and et cetera, and also partially, as you point out, that the float is actually very small. About 12% of the shares outstanding are actually part of this deal. So I've talked to a few sources this morning that have already said that they think that limited supply on the market, and we saw kind of that same trick be pulled by some of the past social media IPOs last year. That's actually helping to boost demand for the shares and maybe keeping the trades at a little bit of an artificially high level.
And what about the fact that Yelp sort of has a compatriot, if you will, in Angie's List, similar to what they do, and that's actually held up quite well, considering what some of the other ones we mentioned, like Groupon or something. It's actually held its gains. Does that help this IPO? And I know Angie's List is actually bouncing on the news today, too.
Yeah, Angies List was up earlier and then it came back. I think there is somewhat of a read-through, although one has to consider that while they do somewhat of the same thing, featuring online reviews of local businesses, they're actually trying to monetize different parts of the business. Angies List tries to make money on its users. The people who use the website pay a subscription fee. Yelp is trying to make money selling ads to the businesses that are featured. So I think you can look at it two ways. Part of the optimism this morning is that there's still a very big addressable market for Yelp to hit, because of all their page views and of all the reviews, they've actually sold ads to a very small portion of the users, of even the businesses that have claimed ownership of the pages. Some of the more bearish people out there, of course, point to that very fact and say they have not been able to monetize very well, even considering that they spend 2/3 of their revenue on marketing. So that's potentially a concern that can creep in.
Having said that, this is an area where there could be competition. There is Angies List, but also Google has been reportedly making some movement in this area. It's easy to see somebody like Facebook, even Twitter, doing something to capitalize on this area. What are the concerns about the competitive risk to Yelp long term?
Well, I think there's definitely some concerns about that, and it's notable that in 2009, Google was rumored to have offered $500 million to actually buy Yelp. One point on this business has been that a lot of people have always thought that it plugs in very easily to some bigger existing businesses out there and wonder if it's really sustainable as a standalone. It's also possible that kind of speculation is also helping to drive up the shares. That now that it's public and people can see the numbers, that it might become an attractive target for a Groupon or a Google or some other company. It's really hard to tell that, this first day of trades, whether that's going to play out long term or not. I think those concerns and that speculation is a factor, though.
And what about, just on George's comment, there could be other potential players here, and also the difference between Angie's List and that Yelp is free, and sometimes people call into question some of the reviews. Is there a way that they can monitor that, or is that a problem for a company like this? If obviously, if people can't trust the reviews that they're reading, is that an issue for them? I mean, not that saying that they can't hear, but it's just there are some times that people wonder when they go on these reviews who's exactly behind them.
Sure, that's been a question for Yelp actually for a very long time. I know they employ resources to try to deal with it. It goes both ways. Our business owners using family members and friends to kind of artificially inflate reviews, and the flip side are people giving overly harsh reviews because a waiter spilled water on them by accident. It really cuts both ways. I think quality control is an issue for them that they try to address. Whether they do a good job of that, of course, remains to be seen. The fact that I think that it seems that a lot of businesses are still kind of hesitant to put ad dollars towards Yelp, I think is indicative of some of the concerns that are still out there about it.